Alright, so without further ado, I'm going to explain to you guys what bullish stands for in my own words. Of course, you can go to the internet and search this out for yourself, but to my understanding, bullish stands for price moving up. Right, that's just simple. I'm gonna just simplify it for you guys so it's not too hard to understand. Bearish, price going down. Right, now that you know this, you know what I'm referring to whenever I use these terms. Bullish, price moving up. Bearish, price going down. And another thing you can also say is like, when bullish, you can say when the market creates higher highs and higher lows and things of that nature. Bearish is when price creates lower lows and things of that nature, right? And it doesn't respect previous highs, right? I mean, yeah, it respects. Bearish is when the price respects previous high. Bullish is when the previous low respects the the higher low respects the previous low. Holy, my fault. Hold on, I'll be right back. So think about it like this, guys, right? As we all know, the stock market tends to do this: go up, go down, go up, go down, go up, go down, go up, and go down, right? Can't just go down and then shoot to the moon, right? It's not possible. So, whoa, what is this? Hold on. Bro. Okay. Right, so my job is to tell you guys what these two phrases stand for, so you guys understand, right? So bullish, remember I said price is when price goes up, right? So let's just put money sign, and then we put like an up arrow. Bullish is when in the market we tend to say the price is bullish when you see this, right? So let's just do a table right here. Let's just this doesn't really work like that. Let's just go like that, and then let's just go like 10, 50. And then 100, right? And then down here, what can I put down here? I don't really know. We could put the time and stuff like that. Just go like September. November. Whoa, skip October. December. So in the market, you already know that it goes up, down, up, down, up, down, right? And then my goal is to teach you what that means. So boom, price goes up, stops right here, right? Creates a high, pivots, goes down, right? Then goes back up. What does this do? That means created a higher low and it respected this previous low. Are you guys following me? Hold on, let me do that again. Whoa, hold on. Let me do this again. So the market goes up, creates a high, goes down, creates a low, goes up, creates another high, comes down, creates another low, goes up, creates another high, right? Now, normally, when this is called market structure, right? When we see multiple points in the market where it creates different lows, right? So, important factor to comprehend is when you see a low and then the market tends to create another high and the low respects the previous low, then we're bullish, if that makes sense, right? As you can see here, this low respected this, so we're bullish, guys, right? Now you see how this high disrespected this high. Basically, remember, support and resistance lines, right? This right here would be your floor, this would be your floor, and this is your roof, right? Now this becomes your support when this becomes a roof. When the market creates another high, your low, the previous high, becomes your support, right? Remember, key zones. So let's say this is 80, price went to $80, right? Holy. Price went to $80. Boom. Let's just say price went to $80. I'm gonna put that there so y'all can see it. Now we're gonna switch the color. Now when we're bearish, this is what we're talking about right now. Bearish. I should have changed the color, but anyways, y'all already know this is red. Red is your bearish, and then green is bullish, right? So look, when the market is bearish, this tends to do this. Whoa. Right, so when the market is bearish, it tends to disrespect this low, right? Come up here, disrespect this high, come down here, disrespect this low. Yeah, y'all following what I'm doing, right? And then, what am I? Comes back up, disrespects that low, right? Remember how I spoke about resistance line and things of that nature? Look, so y'all could I'm gonna put it into perspective. This low broke this low. This high disrespected this high, right? Now this is called a market structure, right? We're in a bearish cycle right now, correct? Now we go here, here, and here. Right, this high also disrespected this high. Right, now we're in a point in the market where, if you paid attention in my last video, you guys know that. What is this? Okay, never mind. I was trying to. Alright, we're gonna put that to the side. So yes, if y'all paid attention to my last video, y'all know that at certain points in the market, the price tends to drop down, right? For example, honestly, you see this right here. This is, let's say this is $40, right? Let's say this is a key zone. That's a key zone over. When price hits 40, it tends to reverse or go up or things of that nature, right? So, and pay attention to, this is another key zone. Key zone would be, let's say for example, like 70 or let's say $65. That's the key zone. Why? Because price went down and created a high at 65 and then went back down, retested, and then went up. to $80. You understand? And then when price went back down, it hit 50. It hit $50. From $50, pivoted, went back up, and it pivoted again, and then it hit like the 65 range. Notice how every time when price goes up or down, it hits certain points. Like for example, you see how when I went up, or when I went up, went down, boom. Normally the market tends to go back to these previous highs. That makes sense. I could show you an example on the market right now. Give me a second. Cool, so let's look at a real market example. Remember what we spoke about. Right here, I can show you this little example right here. It's nothing too crazy, but it's still a good example. So overall, y'all understand from the graph I graphed earlier about highs and lows, right? So what the market do? Stopped, went up, stopped, went down. Remember, bullish, respected this. We're kind of consolidated a little bit, but that's all right. Went up, broke this, right, and then went down. Look, you can see here. Remember the example? Boom, went up, disrespected that, went down, boom, and that's how you spot a reversal, ladies and gentlemen. So you go down. When you go up, you're going down, right? Look, disrespected these zones, right? Went up, down, went up, down, up, down, right? Boom. Notice how it still didn't disrespect that. Still how it respected this low. So boom, that's another reversal. That was a sign. Okay, price is about to shoot up, and look what it did. Shot up. And this is considered a BOS, a breaker structure, because this is the previous high, and it broke that previous high. If you see what I'm saying. And then this would be your support, and then like you would be trading like this range. Let's say you were trading this range for this week. This would be your line of like support, and you'd be like, oh, okay, bet. The market pivoted, didn't really break any structure, respected this, liquidated all these lows that it had to, and then went up, right? And then you can see bullish and pivoted. You see, look, it's just all about market structure. Went up, went down. Look, you can see another example here as well. Boom, went up, pivoted, went down. Boom, 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 boom. This is when it shifted, right? And then we went up right here, and we broke structure for right here. And then did we create any high highs? I mean, yeah, we broke structure here as well. So, and remember, pay attention to what it does in these zones. And it went up, wicked this. So, to my understanding, and then I'm seeing this had a new high, went down, wicked it twice, went up, went down, wicked it 3 times. So what I'm expecting in the market this following week is something like this, when it goes up and then it just shoots down, and then maybe later in the week it goes up, right? But now that I showed y'all how to spot these reversals in the market, right? Obviously this is how I trade. Everybody is different, so do what you want with the information I'm giving you. And anyways, let's move on to another point. Let's go to, actually, I'm trying to exit. Cool. So we checked off how to spot a reversal. We did what the term bullish and bearish stands for. Now we are moving on to What is a trend and how to identify bullish or bearish trend? I kind of already went over that, how to identify it, right? Because I already told y'all. We see certain shifts in the market. Like we all know, okay, cool. Market created a low. It's either gonna, like, you see how it's a key zone as well? Excuse me. Actually, because I already kind of told y'all all of this. One thing is, I'm gonna teach you how to read a candlestick. So, put a freaking line through this. Cancel all my exes, put a line through that bitch. Goddamn. All I gotta do is put my mind to this shit. Alright, I'm gonna delete all of this. Make sure I'm gonna leave this on the screen so y'all take a picture of it. My fault, bro. I got OCD. Alright, I'm gonna keep this up here just so you guys can see this, can reference this back over here. So let's go over candlesticks. How to read a candlestick. Oh, I spelled candle wrong. Hold it. Alright, what is a candlestick? For those of you guys who don't know, it's just this, right? These little wicks, not wicks, these little candles. I mean, I'm trying to simplify it, but it's not rocket science, right? This is a candle, this is a candle, this is a candle, and this is a candle, you know? So let's go back to the whiteboard. We come here. Let me just work smarter. Go to shapes, get a rectangle. If I could find it. Is this fine? Yep. Alright, bet. Boom. 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 Alright, guys. So now I already know. Hold on. So y'all can reference it. Whoa, hold on. Can't just change one. Why does it change color? You know what? Let's go back to black. And I'm gonna just do this right here. Red, bearish. Red is for bearish. Green is for bullish. Cool, let's do it. So normally you would see, oh God, use these shapes. Hold on, I'll be right back, guys. Alright guys, I'm back. I had to make this freaking graph. I didn't want to sit y'all through and y'all looking at what I'm doing. So let's look at what we're looking at right now. So how to read a candlestick. Bro, I gotta turn this music down, hold on. So y'all know that the market goes up, right? So this is price going up, this is price going down, right? Reason being is it opened down here and it closed up here, right? That's because price is moving up. It's bearish. Remember, go back to this. If y'all forget, bullish. This is a bullish candle. Although there is different patterns and factors that play in hand of like what to notice, because you know how the market, you're gonna see something like this, a candle right next to it, but that's a different topic for a different video. We're just going over how to read a candlestick right now and know what a bullish and bearish trend is. So right now this is a bullish candle. What is this, guys? Bearish candle, right? Now when you see the wick, this is called the wick of the candle. This is the highest point of that candle where the market went up to. It closed right here, so meaning price went up to this point, went down to this point, and closed. And then when it closes, you know, it creates another candle, right? So let's do this. So the low, this is where the market, this is the lowest, this is the lowest the candle has went, or the price went, sorry. Remember, we go back to the graph. Let's say this is the 100, this is the 80, this is somewhere in the 50, this is like 30, and then this is like 10 or 20, right? So day in and day out, we have to learn how to read these candles, because if we don't, we don't understand anything, right? So what this candle shows me is price is going up, right? So right here, now let's go to the bearish candle. This is the highest the candle went, right? Obviously price opened up over here, right? And then it closed down here, meaning when price opened, when this candle opened, price shot up to here and then went down and closed down here. So let's put this into perspective. And this is the lowest the candle went. Let's put this into perspective again. The candle went to the $100. Okay, this is the $100. I know this is wrong, but whatever. It opened at, let's say, 80, right? When it opened, it reached $100, but then I don't know, I think the bears were in control. Bears pushed the price down to around $30, right? This is a big move, obviously. You know, from 100 to 30 is a big move. And then price went to as low as, let's say, $5. But initially, we had some momentum and price closed at the $30. If that makes sense. I hope that makes sense. If that doesn't make sense, my apologies. I'll try to explain it better next time. So let's go on the bullet. Hold on. I'm trying to switch the songs. All right. Let's go to the bullish candle. Price opened up. Let's use the same analogy here. Price opened up at $30, right? Then the bulls pushed the price to then close the candle at $80, right? My fault. And while this closed at $80, the highest the candle was $100, right? Now the lowest, it opened up at 30. The lowest, it went down to what, $5, right? So that's how we identify, and that's how we read a candlestick, right? Bullish candlesticks, you already know, price moving up. Bearish, price moving down. You see what I'm saying? See what I'm putting down? So that's where we go here. Oh, my fault. We come here. Obviously, this is different. So the blue is bullish. We see Actually, let me go down to smaller time frame so y'all can actually see. And like y'all could go to the internet and look up for yourself on how to read it. I just simplified it, but let's go here. Hold on, this is gonna make more sense if I just go to the normal thing. Por favor. Alright. Another thing is a fair value gap. So I'm gonna go over that really quickly. So we see price reach down here. Boom. So that's the high of the candle. That's the low of the candle. Remember, guys? This is the high of the candle. And remember, price opened right here. And it closed down here. Remember, guys. So this is what this candle basically did. Went down, wicked it, closed right there, right? And then we shift the momentum to the upside, right? It closed right here, and then opened up. Oh, no. Opened here, closed here, then the next candle opened down here, and closed up here. So I hope and pray that that makes sense. So let me just teach y'all something real quick. You would take this low, take his high, right? Then you would come here. Here, FBG, boom. So you want to see the market do this for you to enter it. So we know this is the high, this is the low. From the low, you already know, has to go up, and it's gonna go sideways for a little bit. You see how it went sideways for a little bit, and then went back and filled in this gap to then go up and then break this structure, right? And if we go see in the market, this makes a lot more sense, I'm not gonna lie. I gotta keep it like this. Can I change the color on this? Anyways, yeah, let me change the color on this. If I can, like, how do I even change the color on this shit? Alright, oh, right here. Let me delete this for y'all. So come here, created a low, created a high. Well, we created a high, That's when the market pivoted, right? Went down. We pivoted from this support line, went up, and then we see here that we're in a kind of, not really a sideways market, but we see this, go here. We notice that this low right here, you'd want to wait for it to play off these ranges, see if it's actually gonna fill in that fair value gap. This is the high. Boom. So normally you'd see something like this. Down. Whoa, what the hell is that? Goes down, goes up, plays in this ranges, waits, goes down to a certain point, and then it explodes to the upside, right? Then it created a high, went down, back to this spot, and what did it do? Went up, right? And then what did it do? Went down, boom, shift of momentum, now we're bullish. Look, another thing, that's how you identify a bullish trend. You see how there's multiple spots in the market where it didn't break this support? That means we're bullish. And then bearish, I'll go over that same example. Let me see. Anyways, look, we're high, low, let me see. Nah, that's too much of a range. Yeah, nah. I don't. Actually, this could be very important. But just to show you guys how do you identify bearish trend is when you do this. You have a high and you have a low, and you have a high that disrespects this high, you have a low. Honestly, right here it kind of faked you guys out. Goes up, look, disrespected this high, went down, disrespected this low, went up, disrespected this high, went down, disrespected this low, boom, consolidated for a bit right here, and then yeah, I can see we shifted momentum right here. Why? Because of this fair value gap and of this momentum shift, the support, and then we're bullish right now. Whoa. See? Now look where we at in the market. Have a huge downshift. Look at this. Goes down. It's gonna go like this and then go up. Just because it wants to fill up this fair value gap right here. Come right here and then go down. Anyways, that's it for the video today. Obviously, we still have a lot more points to go over. I think I already cleared everything on lesson 1. Lesson 2 is like support and resistance levels. I already did that. Lesson 3 is setting target prices and setting stop loss and things of that. And then that's it for today, guys. I hope you guys enjoyed the video. And once again, like, comment, subscribe, follow, share with your friends and family. That's it. See y'all in the next one.